Well, ever since Barack Obama called them fat cat bankers, the president's relationship with Wall Street has been less than cozy. But today saw a strange twist. The president's choice for Treasury Secretary had to defend his time as a Wall Street insider, while Republicans railed against bailout bonuses within banks once considered too big to fail. The same banks whose investors lost millions in the financial meltdown. My co-anchor Bill Weir has the story.
A ghost of the financial crisis came to haunt Congress today in a most unlikely form.
There are risks that we need to be very much on guard against.
His name is Jack Lew, a guy with one of the most sterling reputations in Washington.
Mr. President, it's an honor to be here.
As a loyal and low-key numbers-crunching wonk, he has worked his way up to White House Chief of Staff and is the president's choice for Treasury Secretary.
Wall Street dives more than 360 points.
But a few years ago, as the American economy was melting down, Jack Lew was an executive at Citigroup, which former FDIC Chair Sheila Bair describes as the most toxic of all those troubled banks.
They were the poster child in need of government aid.
Citigroup needed 3 government bailouts, over $460 billion in taxpayer dollars and loan guarantees just to survive. But at the same time, they still managed to pay Lew a bonus of nearly $1 million.
Explain why it might be morally acceptable to take close to $1 million out of a company that was functionally insolvent.
Senator, in 2008, I was an employee in the private sector. I was compensated in a manner consistent with other people who did the kind of work that I did in the industry.
Lew's tenure at Citi included a post as the Chief Operating Officer of Alternative Investments. And when he arrived in 2008, the division was in deep trouble, bleeding money. Both investors and Citibank's own financial advisors were in open revolt, which you can see in internal emails obtained by ABC News. "I'm watching a slow-motion movie of my life being destroyed," reads one with the subject line, "I'm frightened." It was written by Skip Sussman, one of Citi's own financial advisors, addressed to then CEO Vikram Pandit, and it drips with desperation. "I have not slept in a month," he wrote. "My wife looks at me, begins to cry, and asks, 'What are we going to do?' I'm crying now, just writing this."
It was like a slow water torture of pain on a daily basis as clients would call in asking me how could I have done this to them.
The source of his pain? Investment funds called Matt and Falcon, created by Citigroup and sold by hundreds of advisors like Skip to thousands of clients like Chris.
Matt provides investors with a stable above-market return.
A Jersey guy looking to park some of his self-made wealth somewhere safe. His advisor steered him to Citi, and Chris bought $1 million worth of Matt 5, one of the funds built around low-risk municipal bonds.
Pretty much as low on the risk scale as you can get.
And that's what you were looking for?
Yes.
Okay. What was it really?
Well, within a year period, it went to zero.
Zero. You lost everything.
I lost everything.
Chris, his advisor, and many others say they didn't know is that these investments were really kind of a hedge fund, the sort of risky investment that can go bad fast.
I wouldn't have invested. It wasn't for me.
As it all came crashing down in 2008, emails like this show the level of anger and panic within Citigroup's ranks. "My integrity has always meant more to me than anything else," wrote a financial advisor in despair. "I trusted you. I trusted the fund manager. I trusted Citi." On one of the angry conference calls, an advisor named Jennifer Krause summed it up. "The clients got duped." Now, Jack Lew was not at Citi's alternative investment wing when Matt and Falcon were created and sold, and he insists his duties there were only administrative.
I was certainly aware of things that were going on. I was working in a financial institution. I learned a great deal about the financial products, but I wasn't designing them and I wasn't opining on them.
But he was there for the implosion and the aftermath, a time when advisors were begging Citibank to do the right thing and make customers whole. But instead of offering full refunds, Citi offered around 20 cents on the dollar in exchange for silence.
They offered me $50,000 for me to waive my rights, essentially.
Most people took that deal, but Chris was too angry.
The people that are managing these funds are so separated from the skin in the game that they become so arrogant and disconnected from the actual emotion of, wow, we just lost $2 billion worth of customer money. It meant nothing to them.
He bit the bullet, hired some expensive lawyers, and went into arbitration, a long shot.
And what did you think your chances were?
I thought they were zero.
But then he saw the emails from inside Citi.
All the facts of the case were overwhelming. I didn't know if I was going to get all my money back, but I was convinced that the panel would rule in my favor.
And they did.
They did. They gave me 100% of my money back.
He's not alone. So far, Citigroup has been forced to pay back at least $85 million as 14 arbitration panels around the country ruled against them. They've also settled with dozens more. But the bank insists they adequately disclose the risk to advisors and investors and admit no wrongdoing. We believe Citi acted appropriately at all times. A spokesperson said in email, "We disagree with those arbitration panels that have ruled against Citi."
We are in the midst of a horrendous recession right now.
2 years ago, during his confirmation to head the Office of Management and Budget, Lou was asked if he thought looser regulations on Wall Street led to the financial collapse.
I don't consider myself an expert in some of these aspects of the financial industry. My experience in the financial industry has been as a manager, not as an investment advisor.
But now as Treasury Secretary, Lou will be tasked with making sure too big to fail never happens again.
And it does reinforce this cynicism that, Wall Street runs this town. But again, it's the president's pick, and I assume he weighed all those factors into the analysis and deciding to nominate Mr. Liu for this very important job.
The White House declined our request for an interview with Liu, and by all indications, the president will get his wish and he will sail through confirmation.
I've practiced law, I've worked at a university, I've worked at a financial institution. I think that if I hadn't had a set of experiences like that, I wouldn't be sitting here today speaking with confidence that I could undertake the responsibilities of Secretary of the Treasury.